All right, let's jump into things. A little bit later this morning, 11:35 on 12th of March. So pretty interesting sort of day through yesterday. Very I might say sort of choppy. It's definitely up and down and that sort of through there. Metals, I'll get onto those in a moment. They just played perfectly, and really we're kind of seeing a setup for a major break potentially, as I did sort of cover yesterday with gold. Silver really sort of outperformed yesterday. Gold silver ratio breaking the sort of key levels. So basically, I've on the weekend sort of said, look, this is what we want to see. If we're going to see silver break out or break up higher in that, these are the levels we want to see go, and that's what we did see go there. So, yeah, look, I'll get to metals in a moment. Start off with Aussie. So yesterday we were sort of looking around this little sort of little consolidation and jump onto a lower time frame. I would say, look, it's a pretty clear cut sort of little little range that we had going through here. And as you can see, you've got the nice little breakout, tried for the back test, higher high, and then just wallop, bang, middle of the night. Just it sort of got crunched down. Look, recovery very strong, and obviously sort of coming back in and pretty much to the sense sort of hitting exactly where we kind of sort of thought the sellers would be coming in, and kind of sort of almost sort of shores up this little sort of channel that we have sort of going on here. And this was based off the idea of these two highs and obviously these sort of lows matching up through yesterday. We're at this point here when we did the vid. It did a little bit of a shakedown early, popped back into that range, held it, obviously sort of like as you can see here. And this is why it's important to sort of really not jump the gun in terms of sort of like, oh, it's broken there, so get into it, because you wait for that sort of like candle close on the outside of these ranges, gives you that ever extra level of sort of confirmation. As you can see, obviously that didn't go through here. We had a bounce up here, still unable to close down underneath this zone. So because it's one thing to sort of go, okay, here's your support and here's your zone. You got to sort of be able to unpack that and say, what does that mean? It means that every time market sort of comes here, market comes here, there's a section of the market that's going, yep, cool. That for me, given all sort of information available, that's a good buy, and I'm going to buy it at that level. When you break these levels, that's when they're sort of saying, look, I don't think that's good. Where else can I buy it? Where else do I see value? And that's when you look for your lower support. So it's not just sort of like going, okay, yeah, the technical thing is it's a support. It's actually what does that represent? And I think that's a big thing that sort of sometimes some people can sort of overlook in terms of sort of technical analysis. That it's as corny as it sounds, it's telling you a story, and that's what you've got to be able to do. You're not going to move the market. You just got to be able to replicate, like interpret what they're doing, and then replicate and jump on board as best you can. So as we sort of say at the moment, obviously, yep, still in this kind of downtrend channel. What it does give us though is a nice little breakout line. So I put this one just above these highs from overnight. So we did get a little bit of a push up here. Not sure if that was the time that there was some announcements in regards to potential 30-day ceasefire. That obviously sort of got the market shooting up there a little bit, sort of quite quick then. Obviously, bang, sold into afterwards. I don't think it's been agreed to at this point. So we'll have to sort of see what happens through sort of like, the next sort of 24, 48 hours or so to see if there's any sort of word from the Russians and that, and see if there's some sort of confirmation that, maybe they'll actually sort of work something out. But what it has given us from a technical standpoint is a nice little breakout line. Yes, we got a little resistance just above there. So, these things never break in a straight go. But if we can break these highs, maybe find a little bit of a resistance at these previous highs where we'd expect to, this could give us our back test level. And we could start to come down here and then look to something along this sort of path. Use the next sort of resistance level, because these sort of things very rarely would just, unless you've got some big massive news driver, CPI tonight could be the one, do they just sort of go straight through these levels? The market sort of just as much as they've valued it. Every time it comes here, I'm going to sell it, going to sell it, going to sell it. They've obviously sort of done this on the other side. Bang, buy it. I'm going to sell it from these levels here. And this is why the support and resistance, very important, but pretty much are the same thing. As you can see, they were trying to buy it and hold it, try and buy, hold it, rejected it, bang. So this is definitely going to see some sort of reaction as we do come up into this level, as we've seen it a number of times over here. Likewise, we up around this sort of 63.50. this is also going to see some sort of reaction. As we've seen this level play its part, resistance, tried to go over and sold down twice, and really sort of knocked back down from that sort of second rejection up over there. So look, at the moment, look, it is still in this downtrend channel. It's shorter time frame here. You can see it's obviously putting in higher lows, higher lows. Right now, look, I would say above sort of 83, but give it a bit of leeway for an overshoot down to 77. Stay above 77, and I feel you're kind of sort of just really sort of consolidating this period here, and this is what could sort of give you a little bit of a break. So obviously we're not going to break from that point there, but say that's your trade through here. Again, sort of through this falling resistance. Let's check an alert on it. Short-term falling resistance test through there. So that would be your upside sort of moves. Obviously, sort of take out those highs from overnight, 63.10 and change. You're probably going to run into a bit of issue about, sort of 10 or 15 points above this one anyway, as we sort of said. So this would be your kind of levels over here, and then sort of see if we can get a bit of a sort of backtest. Backtest would definitely come down to this level. This is just kind of arbitrarily picking it. Could just come to these highs here. We just have to see how sort of hungry they are for it at the time. But the point is that we will see some sort of reaction here. Look for a base around here, previous resistance, maybe new support, and that could be your launch pad to sort of move through here. So that's the top side idea for it all. The downside idea, as I said, look, 83 is a bit of a support through here, but take out this lower wick to be a little bit sure. I think if you get down underneath 77, then you're probably, well, you're definitely going to be coming back and testing these 67s. You break the 67, well, it's just on with the show. And 1, 2, 3, 4, and you've got your fifth move potentially coming down here. We're looking back down at sort of 35 kind of range with it all. But as it is at the moment, look, it is a little bit still overbought. This, I don't like this second push coming in a little bit weaker, just underneath 80 on the RSI. It's on the 1 hour here. It's a 4 hour look. Look, the 4 hour doesn't look too bad at the moment, but remember, we got CPI tonight, and I just don't think you're going to get anything major prior to that CPI. So, I think this could potentially just sort of find itself a sort of maybe 10, 15 point range and just kind of sort of sit around and mill around there till we get the data out tonight. Excuse me, the expectation is that CPI will come in a little bit cooler, only slightly, but again, slightly cooler is good because it bucks the trend. The last 4 CPI prints have been a little bit hotter, bit by bit, creeping up. As long as they can stabilize that, I think they'll be happy. We did have JOLTS data overnight as well, so let's have a quick look if we can get onto a lower time frame. Excuse me, where were we? JOLTS, 1 o'clock, which was this candle here. As I said, yeah, so it was going along fine, and then bang, smack back down. Found support, previous areas, as I just covered before, and then obviously sort of, managed to overcome this, moving up to the top side here. So, look, I do think that this could potentially still move higher, but as I said, before CPI, I just don't think that's the time that we're going to be getting the major breakouts. I think this needs to just chill out and cool around these levels here for a little bit more. As I said, as long as we can stay above 77, I think it's really just sort of consolidating for a break attempt up above 63. 63 sort of 30, 60 to 25, 30 would be your first sort of target. All right, and on the gold, so this one just played out beautifully. I actually went very heavy. Well, not very, we're pretty heavy down here on these positions and that, which were quite good. And mainly just a couple of sort of things through it all. On a higher time frame, gold does a couple of typical sort of things. One is that it sort of likes to consolidate, break out, fake out, and then sort of break out, and then boom, you see a big move to the top side. Obviously, we're not seeing that at this second. We're seeing sort of it's kind of like slowly roll over a little bit as it comes into the resistance level here. But as we can see, it's a very straight line. Whoop, it's a very straight line of kind of resistance through here. A couple of little spikes over the top, but this is where the sellers are. They've made it very clear that sort of come up into these 20s, that's it. They're not going to let price pass this at this point. When they're not there, if price comes up here and closes up around 30, your first move, I think, is pretty quickly up to around test 50. This is a move that you might get prior to the data. You're not going to get major breakouts, but this is a move that you could see prior to the data. Just to sort of like a sort of shook people out down the bottom here. You could see this push up here, take out some short stops potentially, suck in some longs, then rip back down. I don't think you're going to get any major breakouts prior to the data. I mean, at the moment, it's looking like, okay, yeah, it's rolling over down here. I wouldn't put a great deal of stock in this. I wouldn't be necessarily shorting it right now. The fact that it sort of like really did this sort of big comeback here yesterday, this is what I sort of covered. This is a very silver move, which I've covered a lot of times. Is find that defined line, test, take out the lows, defined line, take out the lows, defined line, take out the lows, and then move. This is a very silver. Oops. This is a very sort of silver setup, where it sort of like sort of keeps sweeping, 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 and then we get a bigger breakout. Which I actually put a post on X last night because silver just absolutely ripped. It shows up on a lot of different time frames as well. This is not typically what you see with gold. As I said, gold is more this kind of move, sideways range, fake out to the bottom, then blow out to the top. So you know what I mean. They are a little bit of a combination of the two, but you know, as I said, this is very much a gold bullish breakout setup. You just need that confirmation and a close above, say, 25, 27. I think that is going to be when we're going to see things move up, and I would be sort of targeting up around 50s at least. You know, test of an all-time high. Should it go through in that? Well, bang, there you go. You've got your 3,000, I would say. I think it's built up enough stops around this area here and enough around here. So each time it comes down here, you're building up more liquidity, more stops and that up around here, which will feed that move to the top side there. Should this decide to move through, it is cooling off a little bit. DXY is sort of opening up and sort of like moving gradually up at the moment. Nothing superstar, but let's see what happens when the volume sort of comes in for it all. Look, this could obviously, at the same time as we've seen every time here, roll over and come down and just go crunch back down. And we could sort of be seeing a test of sort of like 2,900 and really just this be this little range. If you start to get back down under here, I think the next time down under here, I don't think we're going to see another one of these moves. I think that is the kind of thing. If you close underneath here, I think that's it, and you're going to be moving further down here. But for now, I wouldn't be sort of shorting it necessarily. Short term, I would like to see it stay above sort of 29.06, and then sort of potentially just, as I said, sort of find like even a $10 range is quite big for gold in Asia typically. I mean, we've just been sort of a little spoiled a little bit with the prices recently, just with how much we've seen Asia moving. But this is a little level through here above, so 2010, but really you want to see it stay above 29.06 for it to really just chill. But I just don't think we're going to see anything too major prior to the data today. So, if you just can sort of bounce around this area here, I think that's about what you can expect through Asia. All right, and so we got silver, and so this is what I was saying. Silver does these sweeping moves down like this. It was on the 15-minute that we saw this big breakout, and this is what I mean. Where if you trade the same thing time and time again, you see these patterns and this way that they sort of set these things up. This is the post that I put on X last night, and see this move here. This is exactly what I'm talking about. Well-defined line comes in lower, back to test the line, comes in lower, back to test the line, comes in lower, came up here. This is about the time I sort of put the post on X. I said, look, if you know silver, you know what's happening next. And like literally sort of 5, 10 minutes, I bang, absolutely thumped up to the top side here. Cooling off a little bit here, came up and kissed that sort of 33, big round number. You know, that'd be a decent little target for people to sort of shoot for. I don't think anything other than just the fact that it's just hit that and it's just cooling off. I mean, we had a mammoth day yesterday. So I was saying yesterday in the video, it needed to hold 31.80. And as you can see, it came down to 31.81. So very big response from this move down here at the lows. I think this is really sort of setting up to potentially move a little bit higher. It came out, took out all these highs here, stuffed around a little bit, look, this is to me probably just in a little bit of sort of backtest mode at the moment. It has sort of, actually, we got a little falling resistance here. So it's obviously exploded up through here, coming back down here for the moment. It's still moving up. It's not even sort of overbought, tipping over or anything now. So maybe shake a few people out. For in the short term, I'd like to see it sort of hold 61, but even if it comes down a little bit deeper, I wouldn't be overly sort of concerned. As I said, these are generally pretty typical sort of breakout moves, and you've got the people that sell the pop, like myself. And they sort of move back up here. You've sucked in some new people, stop them out, get them sort of going, what the hell's going on, and then sort of move up. But I would say sort of 33.50s are probably destined for a bit of a touch up at minimum through this move here. And really, what we're just seeing is, like, as I said, a bit of more of this sort of move up through here. So we did get the reaction off from down here, but obviously, boom, 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 dribbled down to the side, did not happen. So let's get that one out of the way. Yeah, so I'd say, again, similar sort of thing. I think it's just going to be the theme of today, or at least of today's analysis, and that is just to expect pretty much consolidation through these sort of periods. So I'll chuck on gold silver ratio just around this gold silver time because I mean it makes more sense instead of sort of putting it at the end. But this is what we were looking at yesterday, and it's this consolidation period, which very much matches what we've seen previously. Well-defined support and resistance levels here. Support, support. Once they let that go, resistance, 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 bang, and it's out the bottom now. So again, same sort of thing. Where are you going to be looking? Okay, well, where have we seen the market value it previously? Down at this 88 level. This is pretty much a sort of a destined area for it. Should this break out the bottom here? Look, I've put down the box a little bit larger just to accommodate these little wick areas where it did actually come down underneath here. But should this break down underneath 88, this medium term rising support is what I'm kind of looking for. 1, 2, 3, and I think this will be the sort of touch-up target that we're sort of looking as it sort of comes into contact with this sort of rising support through here. If we just have a look on the thing here, and as you can see, obviously sort of opening up, pushing up a little bit as gold and silver sort of come off a little bit. Once this, if this rolls over, retests and pushes down here, that's when you're going to see, let's just put a little alert underneath this one here. Metals underneath this 88.68 here would see, I mean, look, that's not a super level for it or anything like this, but as it is sort of pushing up here a little bit, this will get an earlier indicator. It's better to have an early indicator here to at least sort of bring it to your attention than waiting till it comes down here. And that'll be obviously a confirmation. We can sort of put that in as it comes, but this will be an early indication that this little move here bounce, boof, and starts to move back down and really targets 88 in the short term. All right. Flip across, we got DXY, and it just cannot catch a break at the moment. Which, you know what, I think it's a really interesting sort of thing with DXY at the moment because I was watching an interview the other night and they made a good point, basically summed up. It was just that you're seeing a flight of capital out of the US at the moment. It's like everything. There's not one sort of, oh, it's because of this and that alone or anything. But, you know, you've got sort of, headlines of recession fears and all this kind of stuff. US data is not great. That's what I've been saying for a while. The tariffs really were what was holding it up. And that's what I was sort of going on about, sort of saying that, look, the US data is not what's holding up US dollar. Because the US data wasn't anything sort of flash. It was really just, so-so, but the tariff stuff was okay. That was sort of pumping it up a little bit. Now the tariff things have sort of either come and gone or they're being slightly abated. Look, there are still some talks of it all, but you notice with these things, the market grows tired of the same bit of news over and over again. They sort of go, okay, well, so the tariffs are coming, I get it, okay, whatever. They price that in, then they look for the next thing and they start to move on with that. So, I mean, at the moment, it's quite interesting because typically you would have equity market, like a back and forth between, if we're just talking equity markets and US dollar. So, basically, if you think about it, you got the money in US dollar, it's pushing up. Okay, let's get out of the US dollar and let's buy stocks. US dollar goes down, equity markets go up. And I mean, obviously it's not as super simplified as this, but in terms of those two markets, they've generally got a pretty good inverse relationship. But what we're seeing at the moment is this. Equity markets down and US dollar down, so DXY down. And it's mainly because sort of like there's a flight of capital out of the country, it seems. People aren't sort of going, okay, let's exchange our stock and our shares for US dollar, bit of safe haven there. No, they're sort of looking, okay, well, what's happening in Europe? And you've got the stuff going on with Germany. You've got what's happening in Japan, so with the yen. And these things are offering better sort of potential returns than US dollar. While US dollar is sort of like, seeing some weak US economic data, that's them pushing more towards the idea of continuing their cutting cycle. Now, if they're going to continue to sort of have their cutting cycle play out, well, that's going to weaken the US dollar. Where if you look at a couple of these other countries and that, they're moving more into, well, inflation creeping back up. Like, yes, US has had four increases with that, but I don't think that's really at the point where it's like, okay, well, we need to do something about this. I think it's still on the back burner. Recession seems to be the number one sort of talking point with the US dollar at the moment, well, with the US economy. And I think sort of people are going, well, while Europe may be holding higher for longer, and also we're seeing that sort of like, the yen, the BOJ is becoming increasingly more hawkish. They're offering better opportunities. So they're selling off the stock market and they're not buying US dollar. So US dollar's going down because of the weak economic data and potential that you're going to be sort of cutting. Stock market's going down because of recession fears, and that flow is then going into the yen, and that flow is going into the euro, and that's why you saw euro go 5%. That's why, if you look at these sort of things, if we look at sort of euro, that's why you're seeing this move through here. I mean, you're getting a little bit of a push up on the yen here, but I mean, if you stand back a little bit here, zoom out, they're certainly not necessarily sort of just buying this thing up. It's still just like right off the lows. So that is very much sort of like, yen over the strength over the US dollar, euro massive strength over the US dollar. And if we go back to DXY here, we're seeing it sort of like a very sort of different kind of move here at the moment, whereas you've got equity markets breaking down and US dollar breaking down at the same time. So we got CPI tonight. I don't know if the number's big enough to sort of, or the whole event is going to be big enough to save the US dollar. I mean, look, technically it's on support, done a little fake out, it's trying to hold this level. It could push up here. As I said yesterday, this is what you'd want to see. You'd want to see buyers move up, buyers move up, buyers move up. You didn't see this. Buyers held it for a second, but as soon as they weren't there to hold it, bang, they're down over here at the moment. So it's got a lot of work to do because the buyers are still retreating each time and the sellers are pushing it down. These are the kind of levels I thought, look, if we get a big push, remember I was saying this over the weekend, here's your push down. If you get the 23%, that's very sort of like strong continuation level. 38, still a very acceptable, strong continuation level. It didn't even get up past that. It didn't even get up to the 23%, it only got up to 10% and then took out the lows. So as it is at the moment, if you look at this here, you've got sort of your buyers through here, support resistance, same sort of thing. Support resistance, same thing. This is in backtest mode. So really, if this flies back up here, you chalk this up to a fake out. If this rejects from this level here, you're targeting these buyers again to see how strong these buyers are. Are they really going to be, are they going to sit there? If they have another quick test straight away, are they going to buy it again straight away? This is why sometimes when you see these big, large, rounded moves, it's a difference between a quick, fast, doof, doof move down through here. So yeah, it's certainly interesting sort of time at the moment. And this little area here is what I'm very sort of interested about. So I'll put an alert above it and also back into range. Should it come back up past this level here. But at the moment, that's just in backtest mode. And realistically, as I keep saying, sort of with all these things, you move down, you find support. You move up, you find resistance. Resistance generally the same as the previous support. And then you sort of target this. So we still need to get this leg here and possibly get a higher low, double bottom, or a lower low through that zone there. So I got 12 o'clock ticking on just now, so I get a bit of sort of Asia volume coming in. Things are a little bit thrown off for the next couple of weeks while we sort of have this crossover of daylight savings with it all, because Asia obviously hasn't had their daylight savings, or if even if they do, I'm not even sure. But we have had it in the US, so DXY is open a little bit earlier, but you got to remember there's still those times of Asia where the flows come in, so 12 or 12:30 are obviously going to be sort of important kind of hours as well. And we're on 12 o'clock right now to sort of see if we can get some flows happening. All right, so yeah, I think that's pretty much where we're at with DXY. Again, as boring as it is, this is probably what we're looking at today. I would say some sort of range. I don't think we're going to break the bottom here. I think you break the bottom here, you say big higher time frame continuation. Should you take out the lows at 103, 18? Look, I've been trumpeting that price target at 101 for a while. It's slowly grinding on there, and as we see at the moment, this is really coming in, kissing this area and pushing back a little bit. So, this very much could be just a back test to then push down lower. Copper flew back yesterday. So this is what we were looking for here. I got the long in this point here. When you look afterwards, you're like, geez, this is the part that I took profit on. Look, it was a good trade, and I had it on 3 accounts, so it actually did quite well. But this is what I was sort of covering myself for, the idea that then you come back down and continue this little wedge through here. Obviously, it didn't, and it just exploded and bang, sort of flew up through there. So very big day on copper. But this is what I've been saying. This is why I'm like, look, I'm not, even though it's sort of sitting around here, I'm not looking to short this thing. Because, I mean, even this is a move from the lows just there is 4%, which is a big move. And there's got to be something. I mean, look at where the big moves are. Bang, dribble, 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 dribble. Bang, dribble, dribble, dribble. Bang. You know what I mean? Like, there's certainly something that's keeping this thing moving in this direction. And you know what I mean? Copper is kind of something that is also risk associated. And with it sort of pushing up is probably a better idea that you may sort of see some sort of strength sort of coming through, sort of continued strength sort of coming through in the near future. I mean, pretty much we're back up into this little previous range we had. A break above here, you're probably looking up at 488. Those previous highs that we tapped back into just in mid-Feb, so not too long ago either. Again, I wouldn't be shorting this thing. Maybe you could look for a little bit of a pullback through here, but most likely the chop range through here, we see a little bit of a chop through here today. China. China played out very well yesterday. This is where we were at. I said, look, you know what I mean? It's come up here. It was a second attempt, came failed. And this is the thing. So you got this second attempt to get back up and hold above the zone. The bounce level, that's your sort of little confirmation. And obviously it couldn't hold it. Targeting back down here, bang, crunching. It's playing with a very sort of dangerous level here for itself, in the sense that this is a big support area. We've seen this sort of like, and this is what we were targeting for the first price target. And it just can't really sort of seem like it's bounced up here. It's some pretty good bounces, but it's just unable to hold it. So this is obviously your big sort of confirmation breakdown. This could be something that would be coming from CPI should it sort of happen. But there's only so many times that your buyers are going to hold it at these levels here. So really it is just playing exactly as we kind of thought, this larger sort of range. The risk is for the downside move here, and then of course moving down to test that big sort of rising support, maybe down low sevens, I would say, with that move there. And we will tick along. It's not a great deal here. Look, if anything, you may see some little similar move like this, but nothing really so much through the day. It's a bit oversold. This is on the 4 hour. So you can see a little bit of a rally up here. See Aussie and metals push back down. These things seem to be working pretty well as an inverse sort of correlation at the moment. I think a break lower here will also bode well for gold and Aussie. Cool, and I think that's pretty much it on the charts through there. So have a quick look at the news. I don't think we've got much data through Asia here either, so a little bit of a quicker one. 30 minutes again today. So yeah, nothing through Asia. That was it. We had a bit of Japanese data. So this was the jolts and that. So a bit of a mixed bag of it all. So it's revised down previously, but a little bit of a sort of jump up through here. So more jobs open for there. So they're trying to sort of hold the economy, stitch it back together and that. You did see a little bit of a push up. Equity markets got smacked soon after this, recovered a little bit, but they're dancing with the lows. And then sort of a US dollar sort of really sort of moved up, but the market, as I said, they're just using, even on something that should be somewhat US dollar positive, they're just using it as an occasion to sell into. So that's why CPI will be important and the price action around the actual print today. And this is what I was saying. I just don't know if this is going to be the one that saves the US dollar. Should a high print come, you'll see US dollar push up, but it's important to see what they do with it afterwards. Because if they latch onto it and they try to sort of squeeze it and run it up, well, it's on a sort of technical level, so there's a chance that this could work. But if they sell into it, then you're going to see this thing go much lower because even good data, which should be positive for it, they're not using this to sort of take it higher. They're using it just to sort of get out at a better level, which means that sort of selling will continue. All right, that's it from me.